How can a graduate student living abroad grow their savings without sacrificing their adventure? Let's break it down. Welcome to the channel. Every day I explore personal finance questions that real people are asking on Stack Exchange and highlight the top answers from the community as well as any key takeaways. If you're new here, consider subscribing for daily videos just like this one. All right, let's take a look at today's question. Today we're exploring a common question. How should a graduate student invest savings long-term when leaving the US? Here's the original question as it was posted to Stack Exchange. I'm going to scroll through it quickly so you can see the whole question, but feel free to pause the video if you want more time to read it. Don't worry. After this, I'll walk you through the key points of the question so you get the big picture. So in summary, there's a foreign graduate student wrapping up their studies in the US and getting ready to head back to Europe for a new job. They've got about $30,000 in a US bank and want to invest it long-term without moving the funds overseas because of high fees and a possible return to the US down the line. They're curious about the best investment options for non-residents and any tax or logistical hurdles they might face managing these investments from afar. Here's the top-rated answer from the community on Stack Exchange. I'll scroll through it quickly so you can see the full answer. Feel free to pause the video if you want more time to read it. Don't worry, I'll highlight the key points of this answer in just a few moments. In this answer, someone suggests opening a US brokerage account before moving abroad, as some brokers won't support foreign addresses. They recommend a low-cost ETF portfolio for long-term growth and highlight tax implications, noting that while the US withholds 30% on dividends for non-residents, capital gains aren't taxed. Now, before we jump into the next part, if this video has been helpful so far, be sure to tap the like button and subscribe to the channel. We post new personal finance videos every day to help you make smarter money moves. All right, now that we've seen what the community had to say, here's our take on this question. First, it's wise to open a US brokerage account before moving abroad, with options like Charles Schwab International supporting non-residents. Diversifying your investments in low-cost ETFs, including US and international stocks and bonds, can offer stability and growth. Lastly, keep in mind potential US tax implications on dividends, and consider consulting a local tax advisor for guidance. So, in this video, we've covered how to keep managing your investments while abroad, open a US brokerage account before you go, choose a diversified portfolio with low-cost ETFs, and be mindful of taxes. Check tax treaties for dividend withholding, and watch out for US estate tax if your assets exceed $60,000. Thanks for watching. Before you go, did you learn something new from this video? If so, be sure to drop a like on the video to let us know.